See people all around the world here. Okay, guys, so we are recording and we'll get started. Uh, okay, cool. Any outlook on Trump tariff? Yeah, Zach will go into everything that's going on in the markets in this webinar. So, first of all, we'll go over the broad stuff. So we'll go over the US data. So let me just pull this up. So last week, or well, yeah, last week we had NFP. So let's go non-farm payrolls. NFP was very, very positive. I think we could all understand that from the release. So we had just admitting people. You've seen me pausing and looking away and things. I'm just checking the chat and admitting people into the stream. So yeah, NFP came out at 256, which is a good increase from the previous at 227. And obviously a great increase from November's result, which was released at 12 and then revised to 32 or 37. I think it might be 32. So we're seeing a nice increase here within NFP, which is supportive for the US labor market. We saw a similar thing with unemployment. So let's pull up unemployment rate that also came out on Friday. So we're currently stuck in a range with unemployment. Since September, it was 4.2, 4.1, 4.1, 4.2. This time was 4.1 again. So a decrease in unemployment, generally speaking, obviously went from 4.2 to 4.1. This is good, less people unemployed. However, we're still stuck within, the sort of 1.1 to 1.2 range so far, which isn't a problem. Stable labor market is better than a heavily deteriorating labor market. So this gives us an inkling into what we can look for within the dollar. Now, just before we move on to the price action side of things, we're also going to take a quick look at the central bank data and what we can expect here. So with the Fed, which is obviously the central bank we pay attention to for the US dollar, we have almost a complete certainty of a rate hold. So let's just back that up with the CME Fed Watch tool. So you can see here, Prime Market Terminal currently has a 96% probability of a hold of rates, and so does CME. So that's a great idea that we're completely fine regarding the Federal Reserve. We see all major central banks also looking very um, neutral to dovish, really, whereas the Fed is more neutral to hawkish at the moment. So we've got the ECB currently 92% expectation of a cut. Bank of Canada, more probability of a cut than a hold. Same thing with Australia. The Swiss National Bank cutting as well. We've got the Reserve Bank of New Zealand also cutting. The only real outlier here is the Bank of Japan. So we'll move on to the yen as we did last week as well, slightly later into the webinar because I don't have too much really to discuss regarding the yen. Um, so as Zaki or Zach, whatever you want to be called, asked about the Trump tariffs, it's not a big deal, to be honest. It was an initial shock to the market in terms of investors were a little bit cautious and a little bit confused, and it just wasn't a great sign for the US dollar temporarily. But very clearly, we've recovered. We've recovered the downside move that we did see off of um, the slight change and actually surpassed the previous level as well. So I wouldn't expect the tariff to be a huge knock with the dollar in terms of any downside potential. I think we're still on course to surpass 110 and then move up to sort of the 112 level. 160, 165 levels above 162 USD JPY, then intervention. Sean, yes, I completely agree. Again, we'll move on to dollar yen shortly. So if we have a look at the quarterly chart on the dollar, I discussed this one last week and also in my Don't Sell the Dollar video that I uploaded on YouTube. But for anyone that didn't watch those, we'll go over it very quickly here. So we do have a very nice ascending channel here on the dollars. This quarterly chart, so it's the 3 month chart. This channel has been established since sort of 2011 to 2008, 2009, whenever you really want to draw this. Obviously, it's subjective. However, if we're looking at key levels within the market, I think it's very obvious that we are very, very bullish at the moment. The US data is very, very positive. 110 is a big level, into psychology level. That, to be honest, I just don't see any problems. Again, we might see some selling due to the nature of that type of level, but I don't think it's going to be a huge cause for concern or a huge inducement of sellers here. So first call to action really would be these previous monthly highs here at 112. Beyond that would be sort of within the 118 to 121, roughly around here. And again, this is just following the technicals. I'm not really accounting for future economics when I say that. So obviously keep in mind, keep that in mind and trade with due diligence. But yeah, overall, the dollar is continuing to be a powerhouse. And I'm not looking to really start selling this one yet. Why is euro stronger than the pound? Yeah, it's a great question. We'll go into the pound as well. There's some updates there regarding what's going on with the UK that I do want to discuss. Um, so while we're on the topic of the dollar, we will go over dollar yen as well. So as who mentioned dollar yen? Was it Sean? I think it was Sean. Yeah. Okay. So yeah, Sean is completely right with dollar yen. It's very close to danger zone. So it's inevitable that the Ministry of Finance is going to intervene. So just to clear that up, it's the Bank of Japan aren't the ones that do interventions. It's a different sector of finance. So the Ministry of Finance in Japan are the ones that do interventions. Um, just a bit of a fun fact for you. So we are seeing a huge depreciation here of the yen. We did see obviously initial intervention down here back in July that caused the market flash crash when we saw the Nikkei down, I think it was 30 or 40% within a day or 2 days. It was crazy. We saw massive unwinding of carry trades on the dollar yen or all the yen pairs actually. However, obviously this move hasn't been sustained. It was relatively short-lived if we're looking at it in the longer scheme of financial markets. This was July to September, really not a long period at all. So afterwards, now seeing this move to the downside, it's again inevitable that we are going to see this intervention come at some point. Now, the projection is at 160. This is where a lot of institutional eyes are at in terms of where the danger zone is that we're going to get this next intervention. So I'm not saying that we're going to have one on 160 on the dot. I just don't think that's really very likely at all. Because if it was that simple, if we could just put sell limits at 160, get triggered in and make 5% each, yeah, it would be everyone gets rich very, very quickly. However, I think we're more likely to get one around, well, when we break above, so anywhere to sort of 165, I would say 166, and then we're going to start seeing some pressure. But again, I always say this, you can't time interventions, you can't even really assume when they are. So we're going to have to just play it safe, unfortunately, which is, again, it's one of those reasons I've been saying that the yen isn't an asset or a currency that I'm willing to trade at the moment. So let's move on to the pound. What the hell happened with the pound? So we'll pull up euro pound because I'm currently in a position on euro pound. So what happened was essentially the borrowing cost or the debt cost for the UK has gone up exponentially within the past couple of weeks, meaning that all the money that the UK has borrowed, they're going to have to pay more on that, and they're going to have to pay it quick, essentially. So what this is going to do, the UK government basically has three choices they can make. Three choices are cut public services, which is seeming like the path they're going to do, which is detrimental. So, if any of you guys are in the UK or you know anything about the UK, you will know that the public spending has already been cut massively. The NHS, which is the public health service of the UK, is in an absolute mess. There's people sat in NHS A&E, so accident and emergency. I think that's the same as ERs in America, for up to 40, 60 hours, worst case, which is obviously if you've got a nail through your hand or something, it's not great to be sat there for 40 hours waiting to get seen by a doctor. So that's going to put enormous stress, not just on the public, but also on these public services, police, fire, health, all sorts of problems there. The other option is to tax people. which Labour in their manifesto basically said they're not going to raise taxes. So that again would be a big, big problem for the Labour government in terms of popularity and general public perception. It would also, again, it would hit the UK citizens really, really hard. People are really struggling here already. So that again would be a huge downturn in the UK, generally speaking. The other option is tax the rich. I'm not going to go down that avenue, which it doesn't really seem like that's a possibility anyway. But that is another option they could look at doing. But again, that would be a very long-term plan rather than an immediate fix. The most immediate option they have is cutting the public services. So basically, that's why, because investors have lost a lot of confidence within the UK, and there's a lot of concern around there in terms of what are they going to do. So I'm just going to quickly read the chat here. I've missed a few messages. Um, yeah, so Sean's got it. He's got hit the nail on the head. Um, yeah, yeah, Euro pound is bullish at the moment. The pound is in a terrible spot. Um, so yeah. Anyway, moving forwards, let's carry on with our information dump. So we've discussed the pound, we've discussed the dollar. What about the euro? So the euro is also in a bad spot, as it has been for many months since sort of August, September. It's been very evident that Europe is in a really bad spot, actually. So in terms of the central bank, we are seeing cuts here projected in. So we're looking at 2.7% interest rates all the way down to 2%. By the start of 20 or in the start of 2026. Of course, we don't really want to pay too much attention too far in the future because obviously um, the incoming data from the Europe can completely change. Things change, obviously impacting in interest rates. So it's not going to be a huge thing in terms of what we're looking at down here. But we are still looking at relatively aggressive cutting by the European Central Bank, especially when we compare it to the Federal Reserve, which seems pretty stable at the moment. So I'm not looking to go long on the euro at all. So if we look at euro dollar, where we're continuing to look towards 1.0, which is parity, which basically means that we have €1 is the same value as $1. Now, someone asked me in one of my previous streams, I can't remember which one it was, but it was one of my weekday streams. Someone asked, what happens when price gets to 1.0 or gets to parity? Now, I'm not gonna sit here and say we're gonna hit 1.0 and start flying to the moon, and Eurodollar is kind of gonna completely correct. What I do think is gonna happen is we'll see parity hit. We might see a small amount of buying here just to slightly correct some of these downside moves we've had over the past couple of months. And then we're going to continue down as we see the economic data continue to be more than lackluster. So yeah, again, euro dollar, absolutely no hope in terms of upside movements, especially for the long term. Um, yeah, I wouldn't even consider taking any buy trades on this one. Um, riots is also Riots is also there. Does it affect the currency? No, riots are generally not really a concern. I think a bit exaggerated. Deutsche Bank is telling you to dump the pound makes me want to buy it. Yeah, well, have fun with that one. I am currently long on the pound actually, but this was bad timing on my part, to be honest. This is one of those trades where I placed it, and as soon as it started moving against me, once I realized what was going on, I was like, oh my God, I need to get out. So I'm currently short on euro pound. This is basically just mean reversion, so it's completely fine. But if we look at the daily, we're completely overbought, really, on according to Bollinger Bands and RSI again. It's just mean reversion. So I'm looking for a 40 pip downside move so I can get out at break even. But again, it's not a solid trade. It's not something I'm really happy to be in at the moment. Again, it was placed really before I was fully aware of the situation in the UK, which, it's one of those things. Can't always be perfect. But yeah, in terms of day-to-day trades, I continue to look at euro dollar shorts. I think that's the main thing. Now, the next one that I really like the look of is New Zealand dollar shorts. So again, we're playing on the domination of the dollar, but we're also going to look now towards the bearishness of the New Zealand dollar. So again, I'm just going to refer here to the central banks. We've already discussed the Fed, they're holding, or very, very likely to hold. We've got the Reserve Bank of New Zealand. There's a strong chance that they're going to cut their rates to 3.75. So we've already got that central bank divergence. Now, if we go ahead and have a look at some of the data and compare the US to New Zealand. So if we look at interest rates at 4.5 in the US, we've got unemployment at 4.1, GDP at 3.1. And now let's go ahead and have a look at New Zealand. So when it loads, we've got GDP of negative 1.5, interest rates at 4.25, unemployment at 4.8, so we've got CPI at 2.2. So we can see that the data heavily favors New Zealand dollar shorts rather than New Zealand dollar longs. And again, this is also reflected here on the Edge Finder. We've got the New Zealand dollar very, very bearish with actually the maximum or almost the maximum bearish reading it can achieve. So again, New Zealand dollar shorts, in my view, are completely fine. I don't see any reason to buy this market. This would really be a sort of sell any pullback type of market. There's not really anything here to be concerned about in my view. Both New Zealand US dollar and New Zealand yen will present good opportunities to short this week. Sean, I completely agree. I'm not sure about the yen. Again, personally, I'm just not a fan. I'm happy to stay out of the yen, but New Zealand dollar, I completely agree. Um, any pullbacks we see on, whatever time frame you trade, whether it's the H1, 30 minutes, H4, daily, any pullback, I would look to sell. How is Euro AUD? Um, let's see. So yeah, I think I marked this one up on again on one of my weekday streams. It's not a trade I'm in. It's not something I'm wanting to do. The euro, regardless of its counterparts, I'm happy to continue shorting it with obviously the euro dollar rather than going long against the Australian dollar. I'm just not really willing to do that. Um, although. The Australian dollar very clearly isn't managing to hold its own. Really, we are seeing quite a nice uptrend forming here, especially on the H4. We've got a bullish trend. The daily is also bullish, the weekly is bullish, the H1 is bullish. So, to be honest, it doesn't seem like the worst trade to take or necessarily a bad idea. Again, it's just my personal choice to not really take this position. Um, So let's see what else we've got. So in terms of news this week, what have we got? Anything too important? We've got some Chinese data again that could be effective towards the New Zealand dollar, Australian dollar. Nothing too major though. Dollar Swiss, yeah, we can go over dollar Swiss in a second. We do have Bank of England Breedine speech. Again, I wouldn't expect that to be a huge market mover. Um, uh, We do have PPI for the US on Tuesday. That would be interesting to see. UK, we've got CPI, so Consumer Price Index, month on month, year on year, and Core Consumer Price Index year on year. Okay, so it seems like mainly a US UK week in terms of news. So yeah, definitely keep an eye on the market, or sorry, keep an eye on the news releases that we're getting. US dollar Swiss. We are actually long on US dollar Swiss in the Discord. I'm not going to show you the entry and exits or anything though at the moment. But yeah, we are in currently in long positions. This market really is primed to continue higher. The Swiss isn't, in my view, necessarily weak or necessarily strong. I always view the Swiss as a very stable currency. Obviously, there are exceptions when we have huge risk-off moves, um, or if something very specific happens within the Swiss economy. But generally speaking, in my view, the Swiss is stable. So if we get a very strong currency or a very weak currency, often trading it against the Swiss isn't always a bad idea. So in this situation, if you're not already in dollar Swiss, I would be looking for potentially two things. Either a pullback down to the to previous lows and buy it, buy the low, obviously continue the trend. Um, the next option with this market is wait for higher moves. So we'd wait for the break we'd wait for the retest and then look for this continuation, and we would enter on the retest of this daily resistance here. In terms of targets, to be honest, I'd be quite happy as long as we again keep an eye on the data that's coming out within the US. I'd be quite happy to continue dollar strength and ride it into these previous highs, into sort of the 1.0 level. Yes, Australian dollar is taking a huge hit because China is also taking a huge hit. Um, the Australian economy is heavily reliant within, sorry, excuse me, heavily reliant on Chinese data. Same thing with the New Zealand dollar. Funny, I just realized US dollar Swiss is basically 90% euro dollar inverted. Yeah. I've not checked that actually, but yeah, it looks about right actually. Also, the other thing that almost caught me out actually is US dollar CAD is currently reading very, very bullish here with a score of 11. But what do we also notice? What else is getting a bullish reading here? Well, we've got oil. And for those of you that don't know, what is correlated with the Canadian dollar? Well, it's oil. When oil goes up, the Canadian dollar benefits. When oil goes down, it's also impacting the Canadian dollar to the downside. So, according to this, if we are looking to buy oil, we shouldn't really be buying dollar CAD unless you're looking to hedge or diversify a little bit. Well, actually, you wouldn't be diversifying, but if you were looking to hedge, it might be a good idea to do that. But overall, that's not my style. I like to just be in one market at a time. So yeah, I wouldn't really be looking to trade the US dollar CAD, especially with the projected oil strength that we might be seeing. Is it somewhat unusual that gold, DXY, and US 10-year yields are rising simultaneously? To be honest, no. I did see some discussions about this. I looked into it as well. I don't think there's really any reason or like main reason that gold and the dollar are rising at the moment. So with and I think you already know this, Sonic, so I'm not talking to you specifically, but for anyone that doesn't know and anyone that thinks dollar's down, gold has to be up, and vice versa, gold and the US dollar are not necessarily counterparts in that sense. They're not both currency pairs. So, for example, when the dollar's rallying, you are often going to see pound dollar to the downside, euro dollar down, Australian US dollar down, but it's not always the same case with gold. Now, gold has different use cases. Not obviously, like I said, it's not a currency. So if we're having a risk-off move, it's not uncommon to see buyers of gold and the US dollar at the same time, which also will benefit the XAU USD market at the same time. But yeah, as for your actual point, I don't see any specific reason that we're seeing all three rising at the same time. Um, so yeah, Sean, yeah, Australian dollar is big on commodities as well. So yeah, when we see copper falling, well, copper falling, rising, that can also impact. Um, so yeah, good point. The market is pricing one cut for 2025, which might be too restrictive. I think we'll see repricing, uh, which will provoke the correction. Gold is non-yielding asset, so better in bad times. Hold on, let me. Okay, so let Joe, I'll go into your point first. Yes, so markets, as you said, currently pricing in as far as I'm aware, it's a 125 basis point cut by the Fed. However, if we start seeing reasons that we're not going to see that and it'll be more holding, maybe even cutting, then yes. Sorry, not holding, but yeah, if we see more cutting, then yes, we will see some repricing and possibly some more downside on the dollar. Gold is a non-yielding asset, so better in bad times. Gold is just a safe haven. It's as simple as it is. It's a place. It's almost like a shelter. It's like a homeless shelter, if you will. This is the way I was explained it. It's the way I like to explain it as well. So it's like a bomb shelter. So if we have um, bombs going off, which could be economic instability, it could be this is meant to be a bomb, not true, by the way. If we have anything that is causing concern for investors, they are all going to go and run into this bomb shelter, which in this case is gold. So anything that is causing the markets to be uncertain or cautious, worried, gold benefits generally very, very well. So Russia-Ukraine was a great example. Middle East is a great example when we saw the central banks cutting last year. That was a great time as well, which obviously drove gold to have one of its best years. Um, Literal bombs going off boats gold, boost gold. Yeah, exactly. Yeah. So gold, if you ever see problems in the world, whatever it may be, it could be, again, it could be bombs, could be global recessions, it could be anything that's bit, is bad. Gold is going to go up, which is one of the reasons I'm a little bit flat on gold at the moment. I just don't see much that's helping to drive it. We are still stuck really within this sort of range. This is a big range. So obviously, if you're a day trader, a scalper, you're completely fine. But for me as a swing trader, or typically a swing trader, there isn't much here for me. There's not really a long-term established trend like we saw back here. It's not a case of just buy gold and sit on it, you'll be fine. Because, as I said, a lot of the uncertainties we saw last year, such as the elections, people were concerned who was going to get in. There was uncertainty by gold. Russia-Ukraine was still going on. We had the Middle East start flaring up. We had global central bank or major central bank cuts. So all of that was really helping gold. However, again, we've had the US elections. That's done. The Fed's now holding rates. That's kind of over. Russia Ukraine is kind of calm. Well, not calm, but you get what I mean. There's no what do you call it? What's that word? Flare-ups, I guess you could say. Same thing with the Middle East. It's all priced in. It's done. Unless there is something that happens to escalate these problems, then I'm relatively flat on gold. Haven't touched gold since November. Wasn't looking tradable for me. Exactly the same for me as well. If Trump intervenes in Ukraine or Middle East, then good losses, or gold loses some luster in the short term. Yes. Um, yeah, that's a good point, actually. If we do see Trump start to rectify some of these global problems, then yes, we will see some slight shift in the markets as again we get some repricing come in. Specifically, if we see Russia Ukraine start to get fixed, or ceasefires, all that sort of stuff get starting to calm down, we will start to see the euro gain some strength off the back of that because it does benefit the euro. So again, just be very, very aware of and cautious of what's going on. I have a feeling 2025 might be a very busy year and it might be very, very volatile. Because we know Trump is very market moving, even his tweets can move markets. So yeah, make sure you've got Donald Trump's Twitter notifications on. You'll thank me in 2 or 3 years. Will you consider long Bitcoin with Trump taking the reins next weekend? Kind of. So I don't day trade crypto. I don't swing trade crypto. It's not something I like. So when I'm actively trading, I only trade something I fully understand and something I'm very, very comfortable with, which is actually why I primarily trade dollar crosses because it's normally quite straightforward. However, with crypto, I'm never really sure what's going on because obviously crypto doesn't, obviously if you're trading XRP against the US dollar, we do have some correlation there with the dollar, but generally speaking, there isn't two economies for me to assess, and that's just what I do. That's the way I trade, it's the way I work, it's my bread and butter. I don't have the same thing for crypto, so I don't touch it in a actively trading way. However, what I have done is I bought a ledger actually the end of December. So I bought XRP, I bought Ethereum, these orange circles, my buy-in prices. So yeah, I have bought some crypto, bought Bitcoin as well. I'll just continuously buy them every week. I think I'm putting a few $100s in just to see how it goes. But yeah, you'll rarely ever catch me trading. In fact, you never catch me trading crypto actively. Will the market somehow react to Trump inauguration on the 20th? Yeah, no, I wouldn't say so, because we've already had that in. You know, we know that he's been coming into office since November, so it's not going to be any shock. It's not any surprise. There's no reason to react on it really. Um, but yeah, as Joe said, you react to Trump's comments and plans. So we need to be very vigilant and very aware of what he is planning to do, and listen to all these speeches and things. I tried to hedge on Bitcoin and lost both trades. I'm sorry, I probably shouldn't laugh at that. That's quite funny. That's what happens to me. That's why I don't hedge. I never buy and sell the same asset at the same time. It never worked out for me in the past. So it's just a rule. I don't hedge anyway. I don't really see the point of it because obviously, like I said, I'm a very active trader. So if I don't like a position, I'll just get out. There's no reason for me to buy and hold two currencies either way or one currency either way. It's all right. Tried hedging for other pairs and it worked fine in FX, but crypto too much volatility. Yeah, not for me. But yeah, anyway, guys, I think that's about it. So yen, be very cautious of 160, towards, yeah, 160, 165, I would say is where you need to be very, very careful on what your movements are. So within these two levels, just yeah, again, be very cautious. Keep an eye on the yen because we won't get any warning. We won't be told. We'll get nothing at all. It will just happen. The market will just go, and there's nothing you can do. You likely won't even have any chance to get out of a position or add a position. The US dollar will continue bullish in my view. Again, I see very, very little reason for that to change at the moment. Obviously, as I always say, the news will change. Eventually, something will happen that causes the dollar to be bearish. But at the moment, right now, I do sit very bullish on the dollar. The euro also very, very bearish. Currently not seeing any reason to start buying the euro. Same thing here on euro yen. Wouldn't look to trade this at all, in my view. So I wouldn't want to buy because we've obviously got euro strength and we do have the looming possibility of the intervention. However, I also wouldn't want to sell because currently the yen is very, very weak. So you're kind of selling it the wrong time. So again, for me, there's absolutely nothing to do here. All in on yen at 165. Should we do it? Should we all put a pending order for margin yen 165? It'll happen Asian market timing. Yeah, yeah, likely so. I remember from my experience, the MOF like to intervene when the markets are either one of two things. It's either very quiet or it's very busy. So I've seen it on two occasions. They did one when it was bank holiday in America, and they did another one on a very busy news day for the US dollar. Um, but again, you can't time it, so gonna have to just wait. Will knock possibly make a comeback this year? What's your view? I was quite bullish on the knock. Um, Back in sort of Q3 2024, I was looking to buy the knock in 2025, but at the moment I can't do it. So I was looking to buy US dollar knock, sorry, looking to sell US dollar knock. Actually, I used to speak about this quite a lot, but it's just based on the way that this market moves typically. So we reach an overbought level and then we dump, and that's just how it goes. So I was looking to basically capitalize on that. Now, again, I was also looking for a bullish knock due to some of the oil news. I was looking also for a possibility of a bullish oil market, which benefits the Norwegian krone. But with the dollar strength, it's just not possible. Can't trade this market yet. So the only way is if we start seeing deterioration in the US, then yes, I might take a short. But at the moment, again, nothing to do there. What's the most obscure pair you've traded? That's an interesting one. It's not very obscure, but it would probably just be the Mexican peso or probably the NOK, actually. I say this quite often, but I am a very boring trader. So the other guy that works with me actually trades the other trader. He's very, very exotic, if you will. So he trades corn, wheat, cattle, basically anything that can be traded, he will trade. A lot of commodities and exotics, whereas I focus mainly on G10 pairs, and just major currencies. By the way, guys, if you want to join Elite Traders, we currently have a free 7-day trial, so you can come and join us. No cost. If you don't like it, you can cancel at any time. Um, just a quick little plug there. Coffee had a good year. Yeah, apparently it did. But yeah, Sean, honestly, I couldn't tell you anything. All I know about those types of commodities is weather cycles, but obviously import, export, supply and demand. But yeah, it's not my bag of tricks. What's your view on USD Huff? Sonics, man, I just told you I don't trade those crazy things. I just trade G10s. Again, I don't have any idea what's going on with the Huff or the Hungarian. No idea, mate. Sorry. But again, based just on my knowledge of the dollar, I would suggest it would be going to the upside. But again, no clue. You've asked the wrong guy. A week full of data. I wish you all some great profitable trades. Joe, thank you. You too, my friend. Guys, I think that's about it though. I don't really have anything else to talk about unless you guys want specific analysis. More than happy to cover a few things before I head off. Sonics, don't worry. You can ask that in the Discord. The other trader will probably get back to you tomorrow. I don't think he works on weekends, so he'll probably give you some info if he's got any. Um, but yeah, as I said, I'm pretty much done. So unless there's any final questions, I will head off and get ready for market open. By the way, guys, just before actually you do leave, if you are in the Discord and you've been following this position on Euro Pound, I'm going to be managing it very loosely. I'm not sure exactly what to do at this point because I need to see what the UK is going to do. I need to see what the response is going to be before I can start making adjustments. So the first call of action, if we start trickling higher, will be to cut this initial position. Um, and slowly sort of hedge out. So I'll continue to sell, make profit on pullbacks, and potentially cover loss, worst case scenario. However, if we do get what we planned with a mean reversion and a very simple correction, we'll probably get out for maybe, well, I'll get out for maybe 1, 2, 3%. Why trade Euro Pound? I see both. Yeah, Sonics, this is the problem. So I took that position before I heard about the pound news. So if we look, I'll break it down actually, which is actually why I'm not very concerned at the moment. But if we look at the way Euro pound moves, it's very, very good for mean reversions. So I can't swing trade Euro pound because the price action is typically very difficult for me to trade because I like to see very clear rejections of structure, fib pullbacks, all that sort of stuff. And Euro pound typically doesn't do that type of thing. But what it does do is it has very aggressive moves. So we'll often see a move like this where we come to the upside and it'll be like, oh my God, why have we sold this market? Then it will just dump. Same thing here. Oh no, why did we sell? And then it dumps. Same thing here. It just reverts very, very well, which is again why I'm not very concerned because, this move overall is very small. I'm not really very exposed. It's not a huge position. This move here, again, quite an aggressive move to the upside, then followed by a dump. It's a very nice pair to trade for mean reversions, which is again what I'm doing. Um, so I'll monitor it. Obviously, if the trend changes and things are really looking bad, again, I'll just cut it, we'll accept the loss and get out. But I am still pretty confident we're going to get this downside move eventually, and we can get out quite nicely. But anyway, guys, that's it. Doesn't seem like there's any more questions really. So again, feel free to join the Discord. It's completely free for the first 7 days. I'll put the link in one more time for anyone that missed it before. And then I shall head off. Nakish, love you too, my friend. Thank you for being here. Appreciate all of you that join every week. It's always nice to have a chat and we can always have a catch up. Sonics, no problem at all. This call is recorded. As always, it will be on YouTube later tonight. So if any of you want to go back and watch it or catch up, feel free to. Guys, have a great one. Have a great week. I shall see you all very, very soon, hopefully. Now I need to work out how to stop the call. Okay, sweet. See you later, guys. Have a good one.